Hello, hello. Welcome. Thank you for watching. I am Big Chads. Today is Wednesday. It's July 20th, 2022. What we're doing today is we're going to have a wonderful conversation with really an excellent analyst and a mentor and someone I look up to greatly, and that is Mr. Peter Brandt. He's someone you're probably familiar with. And what we're doing is this will be part of the long form interview series on my YouTube channel. So after this video is up, you'll find it there on that playlist. And really what I'm trying to do is bring bright minds to this space, and we can talk things out and really explore issues. Mr. Brandt is an author, a twice published author. You can find his books on Amazon. The one that I'm going to really talk to him about today is his Diary of a Professional Commodity Trader. It's really an unbelievable book, so I think that's going to be really quite exciting to talk about. Folks, by the way, in the chat room, let me know if you can hear me just fine. If we have time, we'll bring on the comments, but I really want to focus on the conversation with Peter. Peter also has the Factor trading service. You can find all these links in the video description. He's got really great services to offer you. So kind of, check that out at your leisure. He's on Twitter, of course, at Peter L. Brandt. I'm on Twitter at Big Cheds. My book is available on Amazon. There's 4 formats: Trading Wisdom. There's a free version on my YouTube channel, Cheds Trading. I'd encourage you to check that out. And both Peter and I are founding analysts at Bitcoin Live, the best-in-class educational platform for crypto. It's a world-class team that I'm just incredibly proud to be part of. Let's get this party started. Let's bring on the man himself, Mr. Peter Brandt.
Hey, I don't think it's quite fair to say you bring on bright stars, because I'm kind of a fading supernova. So,
well, I wouldn't necessarily agree with that, but you're a force to be dealt with, and I think we're all honored and we're better to have you here today. So thank you so much.
it's my pleasure. We've talked about this, Cheds, for a long time. Going back a couple of years, and boy, I'm sure glad that we have a chance to, in kind of a live format like this, chat a little bit about markets and life and wherever this conversation leads.
So I think everybody knows that you're, a trader and you're a speculator, but you're also a private pilot. I don't think a lot of people know that. Do you want to talk a little bit about that? I read that in your book, the diary book.
Well, yeah. I started flying when I was in Chicago back at the Board of Trade. I bought an old plane in 1951. A Piper Tripacer fabric airplane, learned how to fly that, and ended up kind of going, I loved high wings, so I ended up going the Cessna Route 182 is what I ended up with. Lost my medical license due to a pharmaceutical product that I use. It's not a psychoactive one, but it's one for my neurological system. So I've been flown now for 10 years, but it sure was fun. And it's something I used to do almost every day after trading.
Wow.
I'd trade and I'd go fly and find some airport, do touch and goes, and get in the pattern. And yeah, It was a lot of fun. I had a lot of fun as a pilot.
But, did you find that getting up there in the air is almost kind of like stepping to a larger time frame and seeing the larger trend? Did that help you get a nicer, bigger perspective on life when you were, up in the air?
Yeah, no, not necessarily that, Chez. I think what it did is anything dealing with trading, I wasn't thinking about. You're up there, you're busy flying, whether you're flying VFR or IFR instrument, you're focused on the tasks that you have to do to pilot the airplane, get from point A to point B, and land wherever you are, and looking at beautiful sights. And so those are the things you think about. And so you're kind of in real time. You're living life in real time. And everything else, it just kind of fades away, kind of like hunting or fishing. The same thing for me is hunting and fishing. Just activities. When I do them, I'm really not thinking about the markets. I'm not reeling in a walleye pike and also thinking about a position I have on in the Japanese yen. So, they're good distractions, which frankly, I think traders have to have. I look at Twitter. I can't believe these guys are just cranking their minds 24 hours a day.
Yeah.
You got to get away from this stuff. And the more you can get away from it, and the farther you can get away from it for at least portions of your time. And that, you can't live and die in these markets. I trade to live. I don't live to trade. So there's just a lot of other things in life that I do, and trading is my living. I've lived on my trading profits now for, golly, pretty soon it's going to be 5 decades. But
Wow.
you got to have other things you do, otherwise you burn out, and that's a real risk for people, especially day traders. I think,
Yeah.
the more position trading you can be, I think the more distance you are from the markets, and I think the longer your survival rate's going to be.
What a great point. I think if you don't step away, you'll lose focus. So I think you make a great point about stepping away, and I'm glad you shared that. So I think I want to just talk about your introduction to trading, how you got into it, and I'll just briefly summarize my sense of it from the book, and maybe you can just dive into it. Your neighbor, you have an advertising degree, University of Minnesota, and your neighbor got you into trading, and you kind of fiddled around with it, but your big move was going to Campbell Soup and kind of suggesting that they start to pay attention to commodities futures, and they kind of bankrolled you and your family for a while. Is that really just generally how it's all started for you?
Yeah, in trading, there's not a fast track, right? I mean, everybody has to climb the same wall, and the wall's high. And so, I went to work for a big grain exporter at the Chicago Board of Trade. That's how I got in the business, Continental Grain Company. And, part of that is that they give you access to the floor, and they say, go find clients, bring in business. And so, I was a customer's man, as they used to call them. I handled customers for the first 4 years of my trading life. And so, it was income from having customers business that really allowed me to blow out 2, 3, 4 accounts and accumulate enough money to finally, my goal from the start is to trade. I didn't want to do customers business. I wanted to be a trader. I didn't want to be a floor trader filling orders. I wanted to be a trader off floor, speculating for my own account and make that my career. And it just, and so it was good to have a source of income for, that first 4 years that allowed me to, take the time to learn the markets. Because, man, I tell people, even if you're going to end up being a good trader, it's going to take you 3, 4 years to get there. You do it through trial and error. There's no fast track. And, I learned that. I thought I knew what I was doing for the first 3 or 4 accounts that I blew out. And, finally you kind of get your thing together and you get a focus and you figure out, boy, this is kind of a good way for me to trade. And you progress from there. But, it's a process, and it's not an easy process. It's not a matter of being lucky enough to buy some chump coin and having it go 50x. Back then we didn't have crypto. A 2x move was a huge move in the
Right.
market I traded. So, you pay your dues.
So I know you mentioned you knew you wanted to be a trader before you knew you wanted to be a chartist, right?
Oh yeah. I didn't know how I was going to trade. I traded all kinds of ways. I tried to, I was close to the grain market. I worked for a grain exporter. I was getting good weather information every day. I had good access to the fundamentals. How many bushels are being bought by China, whatever the case may be. So, I tried kind of trading based on fundamental analysis. I tried trading based on cycles. I tried trading based on point and figure. I tried a number of ways, and I blow out. I tried seasonals, I tried spreads, so, I kind of found my way through. And it really wasn't until, I think late 78, 3, 4 years in, a friend of mine gave me a copy of the Edwards and McGee book, 5th edition, technical analysis. And, I ate it up, and, I read the book in a weekend. And I kind of had the sense that these charts are calling my name. Now, that doesn't instantly make you a good chart trader. I mean, what it does is it sets you on a path, and the path wanders through brambling bushes and thorns and down cliffs and up hills, and you take a journey with it. But and you figure out what kind of works for you and what doesn't work for you. And I tried to stay true, actually, not only to Edwards and McGee, as I really went back to Schabacher.
Yes.
Because Schabacher really started it all. It was Schabacher who named these patterns.
Yes.
And so I really became a disciple of Schabacher.
Yeah, absolutely. Peter, that leads me to my next question. I've been really looking forward to asking you. You mentioned in your book, you talk about, as you're, when you're writing this book, you said that the chart patterns then were less reliable than 20 or 30 years beforehand. We're now another 20 years after your book came out. Are they even less reliable now, or do you have any kind of thoughts on that?
I think they're a lot less reliable. I mean, you got to understand, when I'm back then, Big Sheds, we didn't have a computer that spit out charts. This is not like today. We didn't have Trading View, and we bought graph paper.
Yeah.
And we started a chart, and we do it. I did it with a pencil, number 2 pencil. Yeah. And you create your own charts, and slowly we had printed charts came out. CRB was a weekly printed chart service, but then you kind of keep it up with a pen day by day, high, low, close. You plot it on chart, and so it's a process. And quite frankly, I still keep some charts by hand because I think you stay, you're more intimate. I hate to talk about it. It kind of, sounds kind of weird that I don't want to be intimate with my charts, but I think you're more intimate with price action if you plot your daily high, low, close, even if you run off a printed chart once a week, that you plot it and you get a feel. And so it just, for me, was just a question of figuring out. But I think they're a lot less reliable today. And I think one of the reasons is there's more chartists. I mean, there's more volume. You have high frequency trading operations, which really exploit stops that are logical based on charts. You get a lot of wicks and false moves and false breakouts. And we didn't have as many back then. And there weren't many chartists back then. I was at the board of trade, and I don't know how many members were there trading 1,000, 1,500 or so. You didn't find a lot of chartists back then. Chartists were not here and there and everywhere you go.
Yeah.
And so I think chart patterns work better back then than they work now. And as a result, I think what's happened is I've kind of modified what I'm really looking for. I found there are still some chart patterns that tend to be much more reliable than other chart patterns. And so I kind of am more focused on those. And, I look at some people's charts on Twitter, and my goodness, they must have 90 lines on it. I'm going, boy, this has got to be a map to some outer cosmos.
That's it. It's like you need a decoder ring just to figure out what they're doing.
It's crazy. Well, of course, if you draw that many lines, you can always tell people after the fact that you haven't figured out. But, for me, if I draw more than 2 lines on the chart, I've drawn too many. And so, for me, I've kind of come to understand that there are a lot of patterns that I used to trade that, quite frankly, are really worthless today.
Even so, and I want to dig into that if you don't mind. And I'm guessing you'll probably say you like to trade, head and shoulders, maybe. Is it that you've adjusted maybe to looking for more weekly patterns that are more mature? You stayed away from the kind of smaller patterns, or is it you're just playing a few? And we'd love to hear what some of those patterns are that you prefer to trade, Peter.
Yeah, and I'm going to add to that, if I could roll back time, maybe what I do a little different, because I'm pretty much a pattern guy. I'm not an indicator guy. I think here's what I think about indicators. Indicators, RSI, MAC, whatever you have. All they are is a derivative of price.
Yeah.
So why should I really care about RSI, a derivative of price, when I can study price? I want to study price. I want to go right to the source. There's no contract I know of in the futures market for the RSI of corn.
That's a quote from your book.
Corn.
That's a great quote from your book, right? Yeah.
Yeah. So, well, I don't know. It's just the way I think. So, there are certain patterns I found which tend to be more reliable. And as I look back, they were even more reliable back in the 70s. And that's rectangles. I like what I refer to as horizontal patterns. You break out of a horizontal line on the chart. You have a horizontal level of support. You have a horizontal level of resistance. I hate slanted lines. I call those diagonal patterns.
Yeah.
They just fail all the time. Trend lines. You throw a chart book in a monkey cage along with a pen and a ruler, and sooner or later the monkey's going to draw a trend line that makes some sense.
It's true.
And so I want to look at where buyers are and where sellers are. And so I want to look at horizontal patterns. So ascending triangles, descending triangles, expanding right angle broadening patterns, head and shoulders, but only with flat necklines.
Yes.
Sometimes wedges, but I'm not a big fan. I don't like wedges. I don't like trend lines.
Yeah.
And I think many of these young traders today that are trying to be chartists, if they would just say, I don't want to look at a diagonal line ever again in my life, they would double their performance. Because I just think there's way too many false signals and false ideas that so what a market breaks a trend line, big deal.
Yeah, right.
Doesn't mean anything, but so I like patterns. I like patterns that are at least 4 to 6 weeks at the very shortest. We had one in ETA in Ether here. We broke out of a really nice ascending triangle. We almost met the target already.
Yeah.
But that's the kind of pattern I like, on up to 14, 15, 16-week patterns. 4 weeks at the very smallest, usually 8 weeks, 8 to 16 weeks. At the longest, 26 weeks. And, that's my bread and butter.
I'm with you on the, I'm definitely with you on the diagonal lines. I always say it, diagonal trend line is more about the trend than the line. I mean, it just gives you a general sense of the movement, but it's not about a line. It's not actionable.
Yeah, it's not. And if I could add, because I'm a high-low close guy, I'll look at the candles. I don't understand them that much. There's a couple little candle patterns that I pay attention to if I have a position anyway.
Like a Hikake, right?
Well, yeah, only if the pattern is really what I would consider to be mature, right? I mean, it just looks like a pattern that's ready to rip.
Yeah.
Or a head shot or a foot shot, which is basically kind of a doji. And so I look at those. You've really come to a good understanding of candlesticks. I wish I admit I'm an old dog. I probably can't learn new tricks. And I think a little bit of knowledge is really dangerous in technical analysis. And that's all I think I'd ever achieve with candlesticks, is a little bit of knowledge, which would make me very dangerous. So I think you have an advantage over me, I think.
No.
Yeah, you do. A little better read within a trading range that might give you some tells that don't give me tells. And so, I wish I kind of understood that a little bit. Now, Bollinger Bands, I like Bollinger Bands. I will look at Bollinger Bands. I mean, it's not on every chart I look at.
Yeah.
And I like ADX. I like ADX index, especially when it drops below 10. Yeah, and you get a 14-day ADX below 10. You get an 8 to 12-week horizontal patterns.
Yeah.
You go dull. You have a hinge day. Yeah, and I'm ready to roll. So little things, and I think that's the key. Is I would never be able to trade the way you trade. You'd never be able to trade the way I trade. Now, I think there's too many people that are trying to mirror other traders out there. In reality, Jack Schwager is a good friend of mine. Jack's interviewed 60 or so really the best traders in the world. And, that's one thing he's told me is, there aren't two that trade alike. And I just believe that if someone's going to want to be a successful trader, they're going to have to find their own way. That doesn't mean that they don't take a little bit from you, a little bit from me, a little bit from some other trader who's out there doing something on social media or have written a book. But they put that together, and eventually they have to own it. You've got to own it, and you've got to take that leap of faith and say, for the most part, I can't go on learning forever. At some point in time, I've got to put my chips in the game and place a stake on what I believe to be a signal. And, for everybody, that takes a little time, and that's a scary deal. I mean, I remember doing that. I remember giving up my customer business in 1980 saying, I'm on my own. I've created my little watercraft, and I pushed out from shore. I'm going to do or die based on what I believe to be the right way for me to trade. It doesn't mean you don't change over time, because you do. You evolve, you morph, you add some things, you gain some nuanced understanding of what you're doing. But I think there's a point in all traders' lives where they say, the problem with so many traders is they know how to trade, they just don't do it. They know what they're supposed to do, but they don't pull the trigger and say, I'm all in, I'm going to do it. I may go down with the ship, but I've got to commit.
Would you say that's because trading is an upstream swim against human emotions, Peter?
Yeah. And actually that came from Richard Dennis. That was a Richard Dennis quote. But it is. I mean, you may think that, well, if I just had a little more knowledge, if I just had the right moving average, if I just had the right indicator, if I just optimized this or optimized that. And the problem is for most people who have been kicked around 3, 4, 5 years, they know what they ought to do. Their worst enemy is to look in a mirror. I mean, it's over. Hey, we're human beings. We're frail human beings. And our emotions will attempt to sabotage us at every turn when it comes to trading. I mean, we're self-sabotaging creatures.
Yes.
And boy, it's the doubt and false hope, and it's all human. It's human emotions. It's not a matter of, hey, I've traded for 4 years and I still need one little trick.
Right.
Right. No, I've traded 4 or 5 years, and I actually need to look in the mirror and stare myself down and be willing to commit and not let my emotions pull me from here to there. This is an emotional struggle. More than it's a struggle of, do you trade a candlestick as your moving average? Use a different moving average than I do. Big deal. You own yours, I own mine.
Yeah.
It's not a matter of, well, I just need to find a different moving average. I need to find another indicator. I need to find somebody else who has a service out there. It's not Peter. It's not Big Chad's. There's got to be some magic out there.
Yeah.
And it's not that. It's a matter of, how do you make the fewest number of mistakes?
Peter, you talk about every year you uncover new weaknesses, kind of along those lines, and kind of continually adapting over time. What are some of the new weaknesses you found recently in your own trading?
Well, I mean, hey, the biggest one, it's one I haven't talked a lot about, is, my worst trading year ever was 2013. Biggest losing year I had, minus 13 or 14%. Longest peak to valley to new peak drawdown in my life. At, I don't know what, 18, depending on how I measured it, either 18 or 23 months, you can measure drawdowns in different ways. And the reason is I bought into a lie. No matter how you trade, you're going to have drawdowns. The way you trade is going to be good sometimes, other times it's going to not be so good. and you gotta live through the bad times and still committed to the way you trade. Every trader is going to have drawdowns. The mistake a lot of people make is they have a drawdown, they switch and try to adopt another. What I'm doing is not working. I better find a new way. And so you're going to have drawdowns. And for me, what happened in 2013, there was a lot of talk back then. The markets have changed. They're no longer the same markets. You need different things. You need to find new ways. And so I turned what was in probably just going to be a normal 4 or 5 month drawdown, 10%, 8%. And I started mixing new things into my trading. I bought the lie that the old ways don't work. That, I can't trade the way that I used to trade in 1979. And so I started mixing and matching and experimenting, and it screwed me up. And it was a terrible time. Emotionally, it was a gut-wrenching time. And it wasn't until 2014 really that I really kind of went, I got to go back to the basics. I just have to forget all this. I'm going to live and die based on what I believe is the way I need to trade. And I'm going to forget all this other nonsense. I'm going to do what I believe to be my own best practices. And I did that. And I'm glad I did. I'm glad I didn't stay with a false narrative. And I went back to what I believed to be the way I really needed to trade, and I came out of it. And I think, again, it's combating lies we tell ourselves. And so, it's committing. And I think that's the hardest part for a new trader is they adopt kind of what is going to be their way. It's going to be their approach. It's going to be the big sheds approach.
Right.
And you come to the point where you go, this is me as a trader. This is me, big sheds as a trader. This is how I trade. I'm going to commit to that. And you commit to that. And the minute you commit to that, you go into a 3-month drawdown. And man, you go, what did I just do? Because oftentimes that's what happens. By the time somebody is willing to go, okay, I'm going to go all in with this approach, inevitably it's drawdown time.
Yeah.
And so you have to get through that first drawdown and live through it, and then have some good times and go through more drawdowns. And every time you go through a drawdown and you don't change it, you keep taking your signals. You don't back away from your signals. You don't change things up. You just plow ahead and you live through the drawdown and you come out of it. That's the way a mature trader becomes a mature trader.
Peter, you talk about risk management a lot in your book. And one thing that you kind of came to, and by the way, thank you for those, that wisdom. Everyone's loving and what you're saying. Chat room's going wild. You talk about if you had closed trades that went against you on day one, like if you entered a position and it was immediately against you, if you had closed right there, you would have been so much better off. You want to talk about that a little bit?
Yeah, I mean, where that comes from, and I'll tell you, in the last 4 or 5 years, it's that whole concept has been where my mind is. I have just dug really, really, really deep on this, Big Sheds. I mean, I've dug into to the point where some well-known traders, I'm not going to mention their names because they haven't offered me to do that. We've developed an Excel program that's got formula in 500,000 cells where we can really dig deep into risk management, right? We can really dig deep in risk management. And, it kind of comes from the fact that it was a realization that if all the trades I've ever made, we used to get paper P&S's on every trade. It would come to us. We get a computer printout. Then we started with email. It used to be on one of those inkjet printers that, had the perforated pages, but it was all one that kept coming. That's how we'd get our equity runs from our brokers back then. That if I could take a sheet for every trade I've ever done and pile it up in a pile, huge pile. Let's say it goes from here to, I don't know what my ceilings are in my summer home here. I don't know, they're probably 8 feet. So no, it's a bigger pile than that. But so you take an 8 feet pile, and that's the total of all your trades. Now I know what I've made during my career net, right? So I know here's my net profitability. Now I stack all those trades together with the largest profits on the bottom on up to the biggest losses on the top. And I start taking those away. So I want to reduce the pile so that that pile now equals my net profitability as my trader. And what happens is the 8 feet really becomes 1.5 feet. And I have 6.5 feet of junk and 1.5 feet that equals my net bottom line, which I would call my net bottom liners, right? And so it comes back to Vilfredo Pareto, 19th century economist, philosopher, Italian, and the Pareto principle that 20% of events give you 80% of results. Now, for me, it's 80-20, 15-85, 10-90, whatever it is. Like, you get the concept. For me, it's very consistent. I can go back all the way, and it's pretty much 15% of my trades equals 85% to 100% of my net profitabilities. And that's kind of something that I can't change. As long as I stay with a winner and don't bail out of winners, but give it a chance to work, that will always be true. And so the reality is that 15% is going to take care of itself, Big Chads. It's going to happen. All I have to do, and it's getting out of trades, because the reality is if I then take that 1.5 foot of trades and look at them and go back and look at the charts of those trades, interesting things. They worked right away and they never looked back. Yeah. Sometimes they would work for a day or two, come back and check my entry, move against me by 20 basis points, then start moving and go. But as a rule, they went immediately. In some cases, I never had a loss in it. Intraday, I never get a loss in it.
Wow.
And so they act different. Pareto trades not only produce the profits, they act differently than the rest of the trades. And so why am I going to sit and sweat day after day and fight a trade that's moving against me when it's not going to be a Pareto trade? The likelihood of it turning into a Pareto trade is very small. And so it's not necessarily bail out the first day it has loss. Now, I won't carry a loss into a weekend. So come Friday, if I have even a small loss in the trade, I'm out.
Yep.
It happened to me the last Friday. I bailed out of a feeder cattle position. I put it on right back on Monday morning.
Oh, me too. I had the same trade, Peter.
Yeah, I just didn't want the loss.
Right.
And so, I put it on. I had a big profit one day, and then came back. It closed just about where I got in. So I'm out, and I just put a limit order at Friday's opening to come back in. And so, and it really comes to the point, and it's really, Jack really emphasizes this in all of his Market Wizards book. I'm a risk manager. I'm not a trader. I'm a risk manager.
Right.
And I think the realization that, hey, everyone thinks of a trader as this glorified thing you do, right? It's I'm a trader. What a boring job trading is, to tell you the truth.
Right.
I'm a glorified order enterer.
Yeah.
I live and die based on the orders that I place. And I don't place orders during market hours. So I place orders after markets are closing. For the most part, I place orders on Sunday afternoon. And those are really the orders I live with the whole week. I may dink them and tweak them, and I get filled in something, so I put a stop in and so forth. And so, I want to get trades, and I want trades that pretty much work. And by the way, last year, 15% of my trade equaled 85% of my profits. And I look at those trades, and I can't remember how many trades there were. There were like 17 trades, I think. And I looked at those trades, and of those 17 trades, only 3 or 4 had a single day when they were losers. And those were not big, less than $300 a contract in futures, something like that. And so for me to be profitable, I need to make sure that my pareto trades do not get washed out by big losses. And so my challenge is in managing the 85%. As a trader, the 15%, they'll take care of themselves. My job is to take losses. As a trader, my job is to manage losing trades. And that's where I want my focus to be. And it really comes down to the fact that everyone places this big emphasis on trade identification. What's your signal? How do you determine a signal? Who cares how you determine a signal? Because the reality is it's not so much what you do in terms of putting on a trade, it's what you do after you put the trade on. That's going to be the difference between long-term consistent success as a trader, which, by the way, is not day after day, week after week, month after month. I mean, because pareto not only affects trading events, it also affects trading days, trading weeks, trading months. And so, my job is I need to really pay attention to losers and not let them build up, not let a market do what I call a popcorn trade where, I go from a $2,000 a contract profit back to a $100 loss. I can't, I call it pop, you think about you're doing popcorn, right? Popcorn bounces up, hits the top of the lid and comes back down. I don't want popcorn trades. And so, so I've got some trading rules that I deal with. They're not perfect by any means, but I live with them. No, I don't sit and anally think about, well, how do I keep tweaking those? Because the reality is you have trades that go from profits to losses, but how do you really minimize that in your life? That's the challenge. So, a trader is an order enter, risk manager. Other than that, and again, something Jack pointed out to me in his book is, you go and interview all these really very successful traders, and you think you go into a room and people are shouting and yelling and screens on and buy this, sell that. And he made the point, it's like going into an undertaker's office. You go into most trading offices of really successful traders, and it's like going into an office of accountants or undertakers. It's quiet, it's orderly, it has set process, no one's screaming, no one's yelling, everybody's intentional. So anyway, that's
what a great answer about risk management, and really appreciate that wisdom. We're coming up on 40 minutes soon, but I wanted to ask you maybe the last question, and you can kind of riff on this for a little bit. You said in your book, and someone asked the name of the book, and I'll promo it afterwards, the most recent book, but there it is. You said that trades that are emotionally toughest to execute are often the most financially rewarding.
Yeah. Here's the reality, Big Cheds, and you know that. Use crypto for an example. If everyone's bullish crypto and you get a buy signal, however you look at markets, that's an easy signal to take, as a trader. So you've got a certain process that you use to screen markets to determine buy signals, sell signals. And it so happens that I call it conventional wisdom, or the composite man is bullish and you get a buy signal. Man, that's no sweat. But we're in the midst of this is an important time of the year in grains. We need rain. We desperately need rain in certain areas of the Corn Belt. And so you don't get rain, prices go up. It's critical area. Well, I'm short soybeans. That was a tough order to place, because I sold it on a big rally, and I put in an order that's going to be good for the week. I put in a sell order in soybeans. That's a tough order to put on. Everyone's screaming, man, we've got a drought, market's going to rally, and I put in a sell order. It's a tough emotional order to put in. And so, we've got a family farm. It's tough for me to want to be a bear on corn,
Mm-hmm.
and so, It's like that. And so it's the orders that are easy to put in because everyone else is thinking that way. Those are the orders you got to look out for. It's the orders that go against kind of what you deeply believe. Because I don't frankly trust my instincts. I think that there's probably an indirect correlation between what I think my trades are going to do and what they end up doing. And so, which is another area of the human being that you're kind of always fighting against.
Wonderful. So Peter, it's been great talking to you today. I think the people who are listening are really loving it, and we're all benefiting from you just kind of, being gracious with your time. Is there kind of anything you want to, wrap things up on? Any thing you want to talk about?
No, I mean, let's do it again sometime. I mean, it's just, I want to encourage people. This is tough. Trading's tough. Protect your capital. Don't take stupid risks. Don't ride a profit 80% back. You accept little gains. You don't need to pick a bottom. You don't need to pick a top. Be willing to live with little chunks in between. And get out of losers quickly, and you'll survive. And the longer you survive, the more you'll actually pick up the scent on what you need to do.
And maybe step away for a while as well, right? And enjoy life a little bit.
Absolutely. Go fishing.
Go fishing. We can end it on that. Peter, thank you so much. It's just been wonderful to have you here today.
Thanks, Chad. My pleasure, my privilege.
All right, brother. I will talk to you soon. Thank you so much.
Yep.
All right. Wow, that just happened. I can't believe that just happened. Let me just remind you of who we were speaking with, in case you don't know. That was Mr. Peter Brandt. Someone had asked me about what the book I was referencing. That was Diary of a Professional Commodity Trader. He also has a book he wrote before that, about a decade, looks like 2 decades before that. Those are both available on Amazon. He is the founder of Factor Trading Service. It's been around for decades, and this guy's unbelievable. All these links are in the video description if you want to, if you're interested in checking out the Factor and what you get with that. There's some information on that website. Both he and I are founding analysts at Bitcoin Live, so I would encourage you to check that out as well. It's just an unbelievable team. So that's Peter. I mean, wow, what an unbelievable time. I'm Cheds. I'm on Twitter at Big Cheds. I'm on YouTube at Cheds Trading. This video will be put into the long form interview series as soon as I click end broadcast here. But folks, I just want to say thank you. I hope everybody's doing well out there. As Peter said, trading is tough. You have to find ways to, as he said, cut your losses and manage your risk so you can survive and you can stay in the game. So I will just echo those comments that he made and say that you should focus on that. Stay in the game, keep grinding, and hopefully one day you'll make it. So folks, thank you so much. It's been my honor to join you here today, and I will be talking to you soon. Big Cheds out.